Okay, in this second video, we're going to be looking at a range of other policies that are designed to try and achieve all three of the goals, so growth, employment, and inflation. So starting with the company tax cuts and the instant write-off scheme. So basically, the 1920 budget has two policies designed to encourage increased investment by businesses. The first one is pretty simple, just starting down the bottom, is that they're fast-tracking the company tax cut. So by the year 2021, all businesses with turnover of less than 50 million will have company tax rates of 25%, down from 27.5% at the moment. They're lowering the tax rate by 2.5% for all businesses with turnover of less than 50 million. When I say turnover, I mean revenue, not profit. So basically, all the total amount of money they make from selling stuff is their turnover. Any company with a turnover of less than $50 million will get a tax cut of 27.5 from 27.5 to 25%, saving them 2.5% in tax on their profits. So, and the second policy is the instant asset write-off scheme. So basically, firms will be able to immediately depreciate all assets up to $30,000 that cost up to $30,000, and this will be available to all firms with a turnover of less than 50 million, which is up from 10 million. So basically, that means that as soon as they purchase any asset worth less than 30,000, they're able to immediately depreciate that and basically reduce their tax liability because it'll be taken off their profits, and that encourages them to invest in new assets and new equipment, etc. So this builds on the old scheme, which increased it from 20,000 to 25,000. Now they're increasing it to 30,000, and they're increasing it for a lot more businesses for an extra year. So basically, the lower company tax rates will provide lower taxes for around 3.4 million businesses. Vic's coming. The government has also legislated that businesses with a turnover of less than 50 million will get access to these lower company taxes. So from 27.5% to 25% in 21-22. This is lower than the tax rate of 30% for businesses with revenue of above 50 million. There's also a decrease in taxes for what we call unincorporated businesses. So they're basically businesses that just pay normal income taxes. What they're going to do is they're going to get a discount as well, but you don't have to talk about that in any detail. So the instant asset write-offs, as I said, increase from 25 to 30,000, and more businesses will be able to access them. So any business earning less than 50 million, which is up from 10 million. Basically, any asset worth $30,000 or less can be claimed back fully in tax in the given year of purchase. So in terms of how that impacts the goals, both of these policies are expansionary and they're designed to influence aggregate demand. So small and medium-sized businesses will be able to write off assets immediately, and basically all you need to say is this provides an extra incentive for them to increase their investment spending in newer capital and equipment and things like that, as they would be more confident in their financial position and their ability to expand their business. So this applies for both the company tax cuts and the depreciation allowances. The company tax cuts will increase their after-tax rate of return, and their future profits will be taxed at a lower rate, which again provides them with a greater incentive to invest. So they're more likely to invest knowing that their future profits are taxed at a lower rate. In terms of the impact on the goals, increase in aggregate demand is likely from increased private investment spending, should lead to falling levels of stocks because of the increase in demand, which will increase output and boost economic growth. So again, you say that helps us to achieve that goal of strong and sustainable growth by pushing it towards 3 to 4%. Increased output should lead to less cyclical unemployment, which will help us to achieve that goal, and it can also lead to more demand pull inflation. But given we're below our target range, it's going to help us to achieve that 2 to 3%. And then what I would be encouraging you to do is stating that the investment in new capital and equipment in the long term should help us to become more productive, which should limit inflationary problems in the future. So the best way to tackle this question is to say that, yes, it might lead to more inflation in the short term, but that's not an issue at the moment because we're below our target range of 2 to 3%. And in the future, if inflation ever is an issue, then the increase in productivity from this investment should actually help to achieve that goal going forward by reducing inflationary pressures. Okay, third policy is the infrastructure spending. Basically, the government's spending $100 billion over 10 years to try and increase infrastructure and improve the quality of Australia's infrastructure. In terms of this year, about $23 billion has been spent on infrastructure, and it's just important that you understand the sort of the key policies. So there's going to be $2 billion for a fast rail between Melbourne and Geelong, $4 billion on infrastructure in Queensland, upgrading the Bruce Highway and a range of other motorways, And there's $3 billion spent on an urban congestion fund, which is designed to just try to reduce congestion across the economy. So like building extra lanes, et cetera, et cetera. So they're the three to think about: the rail between Melbourne and Geelong, upgrading the Bruce Highway, and the $3 billion congestion fund. In terms of how that will impact the goals, so for strong and sustainable growth, you could talk about in the short term that government spending is likely to increase, so there'll be more G2. That will lead to increased jobs as well, which will boost consumption spending, which should flow on to increased demand and therefore more production throughout the economy. And then in the long term, by increasing productivity, firms will be more willing and able to produce. The faster rail networks and faster rail should help to improve productivity, lowering costs of production, which can then boost our international competitiveness and also boost our productive capacity over time. So it's about talking about the fact that, okay, short term it boosts demand, boosts G2, boosts consumption. Long term, as we have the productivity gains, as we reduce freight times, that should lead to lower prices and make us more internationally competitive, and also boost our productive capacity. In terms of the goal of low inflation, again, the increase in supply in the long term should help to put downward pressure on prices, which helps to reduce inflationary pressures. But at the moment, we're below the target range. But given that in the short term, most of the main impact is going to be on demand, that's not an issue because it's not going to cause us to go above 2 to 3%. But in the long term, should help us to achieve our inflationary goals. The increase in production from increased aggregate supply should boost output in the long term and also reduce inflationary pressures, which is part of that goal of strong and sustainable growth. So when you're linking infrastructure to sustainable growth, it's important to talk about the fact that, yeah, it should lead to stronger growth because we produce more, but also sustainable growth by keeping prices down because of the increase in productivity. For full employment, short-term increased infrastructure spending creates demand for labour, so more builders, engineers, etc., to make the projects. Then in the long term, the increased aggregate supply should put downward pressure on prices, which should increase demand and therefore create more demand for labour because there's more people buying our products because of the lower prices, which should flow on to increased production and therefore increased demand for labour. But short term, lots of people need to build it. Long term, it should create jobs because we're more competitive and people are buying more of our products. All right, so there's policies that are sort of more generally boosting aggregate demand. I just wanted to finish this video by looking at some policies that are more related to reducing structural unemployment. So, any of these kind of policies can be used for employment more broadly. So anything that's going to get people into work, so improving their interview skills, getting them unemployed to start their own businesses, subsidies, all these can be used more directly to try and target employment. And when you're comparing policies for cyclical and structural unemployment, they're the kind of differences you're looking at. Cyclical unemployment, things that are boosting aggregate demand. So lower income taxes, lower company taxes, cash handouts, stimulus packages, infrastructure spending, that's all cyclical unemployment. What we're looking at now is some policies that are designed to reduce structural unemployment. So it's funding for TAFEs, spending on education and training, updating people's skills through a work for the dole scheme, and then subsidies for training and education as well to hire the long-term unemployed. So there's two key policies I just want to focus on in this to finish off this video. The first one is what we call the delivering skills for today and tomorrow package. It might be a bit hard to memorize, but basically it's the delivering skills for today and the future package. And essentially you want to know a couple of key things as part of that policy. So what they're doing is they're investing $525 million to try and improve vocational education and training so that Australians will have the skills they need to succeed in the workforce moving forward. Basically, it's got some key characteristics. They're going to put funding towards 80,000 new apprenticeships. And basically how that will work is in areas of skill shortages, they're going to give incentives to employers, so businesses, of up to $8,000, and also give incentives to apprentices, so the people doing the training of up to $2,000 to encourage them to undertake the training. So just be really specific there that up to 8,000 subsidies for the employers and up to 2,000 in subsidies for the apprentices themselves. They're also going to set up training hubs, which I'll talk about in a second, in areas of high youth unemployment. So basically the aim of the package is to give more access to training and education for people in Australia. They're also launching a new foundational language, literacy, numeracy and skills program to try and improve education standards. So essentially, to sum up, there'll be 80,000 new apprentices will be offered these subsidies. It's providing additional incentives to employers, so they get up to an extra 4,000 to what they already do. So even though it's a total of 8,000, it's 4,000 at the moment, so they'll get an extra 4,000. Apprentices will also get 2,000, and the government's also investing in this National Careers Institute, which is designed to improve the vet sector and improve pathways in that sector. There will also be training hubs. This is still part of this policy, this Today and Tomorrow package. So you talk about the subsidies, talk about what they're doing for apprenticeships, but they're also setting up training hubs. So the training hubs, they're going to put $50.6 million into 10 training hubs to try in regional areas of high youth unemployment. Basically, what these training hubs are going to do is provide pathways for people that lack skills to try and reduce skill shortages in those areas. So you don't have to know a lot about this, but basically, if you're talking about this policy, you focus on the subsidies, but also mention that they're doing 10 training hubs in areas of regional areas with high unemployment to try and reduce unemployment in those areas as well. The second policy is the investing in schools and students. And basically what that is schools will see funding of up to 63%, increased funding, so $300 billion for public and independent and Catholic schools. There'll be record funding for all of those schools. And they're also doing this thing called the National Schools Reform Agreement, which is about working with states and territories to update national reforms, which are going to improve student outcomes. So basically trying to improve curriculum and things like that so that schooling is essentially better for students. So to sum up, I'll just finish off with this question here. Identify 2 discretionary changes. Two discretionary policies designed to achieve the goals of strong and sustainable growth and full employment. So basically what I'm focusing on here is the accelerated depreciation allowances and the delivering for skills for today and tomorrow package. So you talk about the instant asset write-offs, that they're available for all businesses earning up to 50 million, up from 10 million, and for all asset purchases up to 30,000, up from 25,000. This will allow companies to immediately depreciate the cost of new assets, which will be able to, which will encourage investment spending, which will help to boost aggregate demand. We can talk about how the increased aggregate demand will lead to increased falling stock levels, which will then increase output and also lead to more demand for labour because of the increase in investment as well, reducing cyclical unemployment, therefore bringing us closer to our goal of 4 to 5% with no excessive inflation. The long-term productivity gains associated with the new investment should also help to keep prices down and allow for more sustainable growth going forward, because we're able to produce more at lower prices, and therefore you define your goal as well, that will be able to achieve growth without excessive inflation. Second policy, the delivering skills for today and tomorrow package, is another policy, and basically what they're going to do is provide added incentives for people to hire apprentices, up to 80,000 new apprenticeships. Employers will get a total of $4,000 on top of what they already get, so $2,000 after 12 months and $2,000 at completion. And the employees or the apprentices will get up to $2,000 as well. As part of the policy, they're also setting up training hubs, which will help to try and improve people's skills in a lot of areas like numeracy and literacy and digital skills. The significant investment in upgrading skills should help to reduce structural unemployment and improve productivity, which should help to lower prices and make us more internationally competitive as well, and therefore lead to more sustainable growth. Thank you.